Crypto Hotep here with another investing video. We are on week 97 of the Family Portfolio and Dividends Tracker. Thank you again for tuning in, guys. I really appreciate the support. As always, guys, before we jump in, and this is financial advice, please do your own due diligence when investing in stocks, companies, crypto, anything of the sort. And just because you see my family investing into these stocks doesn't mean you should invest in the same stocks. We don't know your goals. We don't know what you want to achieve. None of that. So please do your own research. If this is your first time watching the video, go to my channel, go to week number 1, and that's where we go through my whole methodology and why we started this. Basically, in a nutshell, I gave my family a short list of stocks to choose from. They chose the stocks that they most resonated with and they understood. And then we proceed to use M1 Finance as our broker of choice. You'll see that shortly here. And then every week we review this portfolio. We discuss the buys. We discuss any dividend activity. We discuss the balances. We discuss market news, how we're feeling about the markets, and how we're feeling about the portfolio. And first and foremost, these videos are for my family. And, hopefully they can find these videos whenever I'm dead and gone. Or, these could be educational for them as well. Maybe they can carry it on. But if you find these videos helpful, thank you. And please like, subscribe, comment, let us know what you're investing in as well. And also what you'd like to see, maybe something that I haven't shown, guys. So before we go to week 97, we're going to look at the markets here. So the markets for the week of February 14th through the 20th. I know the 20th is tomorrow, but with that being said, we just want to look at some news events on what's going on. So it was a shortened week because Monday was President's Day. Okay, so not a lot has happened. The S&P 500 has traded within a range of around 6,850 to 6,881. In Dow Jones, the Dow Jones Indice has traded roughly around 49.5, so 49,500. Okay, a lot of oil. Oil has kind of spiked a little bit with the tensions between U.S. and Iran heightening. We have seen that. We've seen oil kind of spike up a little bit because of that uncertainty there. We have seen a lot of AI disruption, and this has affected the tech stocks and tech companies, especially in our portfolio. And I'll show you that shortly here. So a lot of markets with, again, markets do not like uncertainty. And the whole thing with AI is infrastructure costs and then also losses. So like a lot of these companies, especially these newer companies, they're operating at a loss, and they're operating at a loss for a long time. The company that makes ChatGPT, I think it was reported that they're actually incurring a loss of over $100 million next year. That's no small little feat there. That's very substantial. So also we had Fed policy developments. So again, ongoing drama with President Trump's Kevin Walsh nomination for Powell's successor, right? So Walsh has actually signaled for potential lower rates, which would be good, but that has caused the Senate and the Feds go back and forth on that. So just a lot of drama around that piece with Walsh. Initial jobless claims fell to 206, better than expected, 225. FOMC minutes provided policy clues but no surprises, right? So, and honestly, those FOMC minutes they're actually good for us because usually we can see ahead of time what the Fed are thinking in terms of rate cuts. We couldn't see that now, and the main reason we couldn't see that is because it was split. The decisions were really split about how the Fed felt in regards to maybe upcoming rate cuts or just keeping the rates as they are. So it was really a nothing burger. And honestly, that's about it right now. The biggest thing that the markets didn't like was the U.S. And Iran tensions. They did not like that really. So you'll see that shortly here in our portfolio. But before we go to week 97, let's go to week 96. Let's recap. Week 96 saw the family portfolio with a balance of $4,001.55. Money weighted rate of return of 1.63% year to date. Dividends earned of $5.92. And then a market gain of $57.05. So what happened with everything going on in the markets? How did that affect our portfolio? Well, it didn't affect it really well. So the balance, you can see, is less, a lot less than what it was that we just reported in week 96. So for week 97, we have a balance of $3,983.17. So we went down. Money weighted rate of return of 1.09%, market gain of $35.92, and then dividends earned of $6.30. So again, have we had any activity? Not really. We haven't had any activity on the accounts because this isn't a deposit week. Next week will be a deposit week, but not this week. But we did have some dividends here, so which is a good thing. So we had dividends from Abbvie. We had 87 cents from Abbvie. Now, if this is your first time watching the video and you're like, I know we're not getting happy over 87 cents. Well, the thing with the dividends is we're playing the long game with dividends, right? We're trying to build our positions up in these companies that are paying the dividends, and the dividend payments will follow. But you're not going to get rich overnight with dividends. It takes a lot of patience and understanding that it's a marathon, not a sprint at all. We did have one buy, though, from all the dividend accumulation that we've done. So we did buy, I bought a little bit of Microsoft for myself, $2.75 worth, just to kind of stack in my side of the portfolio. Okay. Usually if the dividends are like only if they're less than $1, then you can't buy anything in M1 Finance for that. So it'll just sit there and then it'll accumulate. And then usually if it gets to, $2, $1, whatever it is, then I'll just pick who I'll give the dividend payment to, and then what we want to buy with that. So let's see, with our portfolio, we normally go bottom to top in our review of everybody's portfolio here. So on the bottom, our middle stocks has a balance of $551.89, money weighted rate of return of 3.30%, market gain of $15.54, and then dividends earned of $1.75. So the biggest takeaway here is Target is still doing its thing, Costco is still doing its thing, and Starbucks are still doing their thing. So Starbucks, Costco, and Target all had horrific numbers in terms of gains Q4 of last year, and we all mentioned that it's bound to rebound, and that's what's happening right now. We also did mention that there's a huge tech sell-off due to AI, market uncertainty, potential heightening conflicts with U.S. and Iran. So speculative stocks of tech and AI are going to be affected. So Amazon, yes, you're going to be affected, down over 11%. Sony's been down, so it's really not that big of a deal, but they're down over 12%. For our middle, Google's a huge AI player now, down over 3%, and then Tesla, of course, down over 8.5% on Tesla. Okay, now let's go to our youngest. Our youngest has a balance of $569.13, money weighted rate of return of 0.54%, dividends earned of $1.06, market gain of $1.93. So very similar story here. You see Costco, Starbucks, very well-established names, if you will, right? They're not very speculative. They're not in the tech space like that. So Costco and Starbucks up over 14.5%, both of them. Everything else we're down on. Apple, a tech play, down over 3.5%. Tesla, as we spoke about, down over 8.5%, and we already know what's going on with Sony. The thing is, what I found is with the markets, everybody loves tech stocks when the market is up. When the market is up, everybody loves tech stocks. Hey, the market's going to keep going up forever. We don't have to worry about anything. That's not the case, right? Everybody loves throwing money at the tech when the price is going up. But now, when the price is down and you can actually get these great innovative companies at low cost, Nobody wants to touch them with the 10-foot pole, and everybody's writing it off, saying, "Oh, I told you AI is a bubble, and I told you Google was washed up." It's like, when I hear those things, it's it's funny because people just like throw money into things they don't understand because they want to get rich quick. And what I found is, you're trying to get rich quick, you'll go broke faster, right? So with my wife, balance is $577.16 with a negative money weighted rate of return of a negative 1.86%, market gain of a negative $10.89, and then dividends earned only 17 cents. So unfortunately, we have a lot of speculative stocks with my wife's portfolio. They're very good names though. Tesla, we already spoke on that. Microsoft, which is the position we're trying to build, unfortunately, that's down over 17%. But I don't mind buying the dip on Microsoft. Celsius, which was the anchor of the portfolio at some time, is down over 3.5% on Celsius. And then Google, as we spoke about, down over 3%. Pepsi is the one that is not like the others here, up over 14.5% on Pepsi. Again, it is a long-established company. Again, it is a very boring company, right? And it is a company that has weathered the storm for decades, has been around for decades, knows what it's doing. Rinse and repeat for Pepsi. Okay. Let's look at. There we go. Let's look at our oldest. Our oldest portfolio has a balance of $1,136.59, money weighted rate of return of 2.21% positive, market gain of $23.58, and then dividends earned of $0 or 72 cents, I should say. Okay. Now, this portfolio, our oldest portfolio, is a prime example of the split in the stock market right now. You have your well-established, reliable companies, right, in very well-known sectors. You have sectors such as consumer or the consumer market, or the consumer sector, I should say. You have the also like waste management type of sectors. So you have these sectors here where a lot of people don't look at, because these are quote unquote reliable companies that may give you 5, 10, maybe 15% return, when we're tech stocks, you could get 20, 25, 30% in a quick snap. But again, the risk is there too. So when we look at our oldest, this is a fantastic look at how it's split. We have 4 stocks. We have always had 4 stocks in our oldest: Apple, Costco, McDonald's, and Tesla. 2 are unlike the other 2, right? So Costco and McDonald's up over 14.5% and up over 7% respectively. Apple and Tesla are down, right? So this is a good example to say, hey, you can invest into those speculative stocks, but also hedge your bets as well. And this is a fantastic view of that. Okay. And last but not least, let's go to my portfolio. My portfolio is sitting at $1,148.40, money weighted rate of return of 0.74%, market gain of $5.76, dividends earned of $2.60. So again, tech sell-off. So my tech sector in my portfolio, of course, is down over 9%. My finance sector is down over 10%, and we hold in that Visa and Moody's. Moody's actually had pretty good earnings this week, but that's still not saving my portfolio right now. Okay. However, we start seeing some green when we start getting into those companies with utility, right? Those companies kind of with meaning and purpose, those reliable companies that we spoke about. Real estate up over 16.5% with O Realty Incorporation, right? Realty Income right here up over 16.5%, and still shelling out dividends. Okay, what else? We have industrials and energy, as we spoke about before. Industrials and energy, waste management, Cintas, companies that's been around over decades that you wouldn't even think of, right? Up over almost 6% for both of these companies. Okay, consumer staples and shopping. Guess what? Costco and then Lowe's, right? Very surprising here. So both of these companies are in the double-digit gains here. Okay, but again, you wouldn't think anything of them. Pharmaceuticals, kind of a mixed bag. It's not good, it's not bad. It's kind of like at a standstill. This is Abbvie. And then for restaurants and food, we have to go Coca-Cola. Then we have Domino's Pizza, mixed bag there. Domino's Pizza is trying to find its footing right here. But Costco, or goodness, not Costco, but Coca-Cola is doing its thing here, just like Pepsi, right? So Pepsi's up in my wife's portfolio, and then I'm holding Coca-Cola in mine. Okay. But as always, guys, let me end with this. In terms of the portfolio, in terms of investing right now, you're going to get a lot of naysayers. You're going to get a lot of people that says you need to hold off, you need to wait. What I say is, if you feel comfortable with the companies that you are investing in, go ahead and invest in those companies, because you're going to be looking at holding those companies for years to come. Now, if you're trying to do a quick flip on these companies, that's where you're going to get wrecked, because you don't know how low these prices can go on these companies, especially the tech stocks. They can get low. They can get very low. They trade like crypto at some points. So you just have to keep that in mind. And this is why I always say you need to really do your own research, understand what you're investing, because when you do, these down prices show opportunity. So it's like, hey, Costco, for instance, I know Costco's up right now, but I'm just saying Costco's at $1,000 per share, and say, for instance, it drops down to $850. Nothing changed about Costco. Costco didn't change its model. It's not, it's not doing in-store warehouse anymore. It's not doing anything like that. It's staying the same, staying true. It's just part of the market's volatility that the price went down. So guess what? That's a fantastic buy if it once was at $1,000. So you would buy that, if you were invested in the Costco. So you just have to think like that. You have to, instead of think of like a consumer, you have to think of yourself like an owner when you're investing in these companies, because essentially that's what you are. Okay. But as always, guys, for week 97, we have a balance for the family portfolio of $3,983.17, money weighted rate of return of 1.09%, dividends earned of $6.30, and then market gain of $35.92. If this video is helpful at all, guys, feel free to like, subscribe, comment. Let me know what you think. Share this video, and let us also know what you're investing in yourself. Thank you, guys. Happy investing.